Hey, what's up, everybody? It's Thursday, June 9th. Wow, what happened today? Bad day, man. Look, usually I can come up with an explanation for a particular day's trading activity, even though I say it to you guys all the time that it's just like, it's silly to try to ascribe or assign a meaning to every single day. I mean, some days there's, very obvious meaning, or I mean, some days there are very obvious reasons. It could be like some headlines, some event. And then sometimes it's just noise, like it could be something in the market. I mean, technically a big position being moved, you guys who've followed me for any length of time, like in my early days, I was a floor trader on 4 different exchanges, and I could recall times when it was just some guy moving a big position, or the pit was short and it got squeezed, or vice versa. Everybody was long and some big order came in, and it's like throwing a rock in a still pool of water and you get a reaction. So, but today, I don't know, like that was a really weak close. Look, I've been telling you guys that next week, I mentioned this yesterday in my video, that there's some risk coming up next week. Not so much with the Fed, even though that's what it's going to be blamed on. Next week's draft is going to be blamed on the rate hike, and it's going to be blamed on QT. But I told you that the real reason was we're going to have a pretty sizable liquidity drain from quarterly corporate tax payments next Wednesday. That's going to be probably around a 70 billion drain. Right now, the deficit for the month of June so far through June 8th is like 136 billion. So that's good. I mean, that's trending, we're not even half the month. If that's the deficit for the month, that we're trending well over 1 trillion for the year. So these are still sizable deficits. I mean, compared to anything historically, not recent history, of course, but, and what's the deficit? That's the net addition to the non-government's financial balances. That's real liquidity. That's getting pumped in. So actually all that stuff on the liquidity side, it looks good. It's strong. I mean, we're the 10-day average of daily flows, 37 billion, almost 38 billion. So we're trending towards like a 670 billion month. I mean, it's really good. We may not hit 670 billion, but we'll be around 600 billion for the month. And the deficit, is a positive thing for the economy. It's that swimming pool filling up. But anyway, let's get to today. I mean, there were a couple of things, if you're going to pin me down. Early today, and this was early today, there was a news report that China is locking down Shanghai again after 1 week. It just opened back up, and now they're locking it back down again. I think like 3 million people are going to be under lockdown. So, but that came early, and there wasn't really much reaction to that. The market was kind of meandering a little bit lower when that news came out. And what else can I think of? I don't know, bond yields were up today. ECB, the ECB, finally they're gonna end asset purchases. These, large scale asset purchases are gonna end within 3 weeks. And they're gonna raise rates by 25 basis points in July. That's gonna be the first rate increase in 10 years. I touched something and my nose itches. But again, that came early this morning, like 7:45, 8 a.m. Eastern time. So I don't know if that was a factor. Actually, the market turned slightly positive after that, but then it started to head back down again. So, and tomorrow is CPI. So maybe nobody wanted to stay long going into tomorrow's CPI report, inflation report. So it could be any one of those factors or a combination, or it could be something like I mentioned, something technical that I'm not, aware of, some big position shift in the market. Somebody did something big. It could be algos getting triggered off. This is why I don't play this game of trying to, pin a reason on everyday squiggles. You gotta get away from that. You gotta step back, have some perspective. Look, the thing I continue to say and I continue to look at is these fiscal flows, and they're very positive. And the fact that we're seeing a very nice rebound in the deficit, that's a net liquidity addition to the economy. And the daily flows are very strong, running easily around 600 billion a month. So I'm not that concerned. The AAII weekly sentiment survey in the week ending yesterday had the biggest drop in bullish sentiment since November 2020. Okay, so what's that, like 19 months? The biggest drop in bullish sentiment in a single week since November 2020. So bullish sentiment is really low. Bearish sentiment is still very high. And we saw another week, it was the third week in a row when neutral sentiment went up. So I think what happened is some of these investors who were bullish the prior week or over the last 3 weeks, they've been moving into the neutral camp. They're like, I don't know, they're not so sure it's going to go down anymore, but they're definitely not into getting in on the buy side. All right, so they're kind of moving to the sidelines. So there's not much I could add about today, to be honest with you. I'm just, today's a day. I mean, just, tuck it away in your back pocket. Let's move on. It happened. We get past it. Next week, I think I'm pretty confident about how the events will transpire. It's going to be probably a negative week through, Monday, Tuesday, Wednesday. That liquidity drain, those quarterly corporate taxes, especially now, like I was kind of hoping we'd see a little bit more action to the upside so that when next week's pullback comes, we pull back into a range that has already been established, like this range, but we broke down. I mean, so there is short-term risk. I'm not saying there isn't. There is some short-term risk to the market given what we're looking at next week. But other than that, I mean, the big picture again, the flows, I mean, this is all very positive. The sentiment as a contrarian indication, that's also telling you to, you got to be greedy down here. Greedy in the sense like you got to be buying stocks down here. I mean, a year out from now, for sure, you'll be looking back and patting yourself on the back saying, I'm glad I went in. But, that's a matter of mental game. I know a lot of people, they can't do something like that. I mean, they're scared. Like me, to be honest with you, I got to hold myself back every day just because I see bargains all over the place. I just, at a certain point, I don't have enough investable cash because I put it all to work when I see pullbacks like this. I wish I had unlimited funds to put to work. It'd be awesome down here. Anyway, it's June. We got nice weather here. What are you guys doing for summer vacation, if anything? If anybody has some interesting ideas or places where they're going to go, let me hear it, man. I'm curious and I'm interested to hear what you guys have planned for summer vacation. So put your ideas in the comments below, and don't forget to like and subscribe. All right, everybody. Tomorrow, CPI, and see what happens. Have a great rest of the day. Bye.